Hello, chart watchers, and welcome to this Friday, February 1st, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got some good news in terms of the jobs this morning, and that more than offset the disappointment from Amazon. Currently, we've got the Dow Jones Industrial Average up 172 points. The S&P 500 up another 11 points. The NASDAQ, which opened weak because of Amazon, has moved positive. It is up 15 points today. And the Russell 2000 back above 1,500 for the first time since early December, moving up 5 points today. 10-year Treasury yield finally reversing its recent downtrend. That's also good news for stocks as money rotates away from the Treasuries. Currently, the 10-year Treasury yield up about 5 basis points, near 2.69%. Volatility index nearing 16. If you recall, the last two bear markets, we never saw the VIX go below 16. That's also where we bottomed back in the latter part of 2018 when we reached highs in the market. So the VIX getting very close to a key level. The XLE up more than 2% today. Energy up strongly. Got results out from both ExxonMobil and Chevron. XLE having a nice day. Real estate potentially putting in a reversal here. We'll talk about this in just a bit. But the XLRE on the flip side down 1.3% today. Broadline retailers, as you might expect, suffering a bit from Amazon. Amazon down $70 right now, back to around the $16.50 level. A couple of really strong stocks in the S&P 500, both from earnings. Symantec up more than 11%. And you can see Zimmer Biomet, ZBH, also having a really strong day. So, Mary Ellen, for about the third or fourth week, we got a lot of what's hot, not so much what's not. How are you doing?
Oh, I'm doing great. Thank you. Yes, it's all about earnings and tons of stocks that are responding quite positively and not a whole lot that's deteriorating.
Yeah, I look at the market, and of course, I look at all the earnings reports, or I kind of get the headline earnings reports every day. And what I've been seeing a lot of, I see a lot of beats, a few misses, but there's a lot more, it seems to be a lot more warnings about the next quarter. Do you think that just the fact that the market went down so much back in the fourth quarter that it already priced that in and the market is actually looking beyond the first quarter?
Yeah, that's actually a good observation. What we had in Q4 were, in fact, management was coming out for a lot of companies. So we saw a lot of downward revisions for earnings going into Q1. So that made the atmosphere really ripe for these companies to quite handily beat their estimates. But realistically, the guidance going forward is at some point there's going to be a reality stick that unfortunately is going to hit this market because, and we will get into this as far as where we are with earnings season, but we are seeing a lot of revisions downward going forward. So
yeah, I noticed a bunch of them today. I mean, there's a list of probably, just quickly noting, I probably had 12 to 14 companies that have either warned about the upcoming quarter or have reduced their, reported and have reduced their guidance. So anyhow,
interesting.
Yeah, we got still a lot to go over and a lot to deal with. But anyhow, we'll get into today's show. Today, of course, we're going to have Mary Ellen doing her what's not, or what's hot, what's not later. But our upcoming schedule, next Tuesday, I will be doing a workshop. So looking forward to that. We haven't quite figured out what I want to talk about. I'm trying to think of something new, something different. Maybe if you use that survey at the end of the show, you think about something, pass it along. Maybe it's something I haven't spoken about, talked about in a while. Anyhow, a couple great guests, as you can see, coming up next Wednesday and Thursday. And then as far as today, we have a lot going on. Of course, Mary Ellen with her What's Hot, What's Not segment. Very popular segment. I still am amazed at how many stocks she's able to get through in 30 minutes. I thought I was fast, Mary Ellen, but you are. Anyhow, then we'll get into the 10 in 10. First stock today will be First Solar in that renewable energy space, FSLR. Take a look at that chart, see what you think, see if it aligns with what I think later. And then our final segment today will be predefined scans. So Mary Ellen and I will show you a couple of maybe predefined scans that we look at, and maybe that'll help you in not only identifying where these scans are, but maybe find some trading candidates for you. Okay, that is it for the agenda. So why don't we just jump right in? We will take a look at the economic reports out earlier today, and there were a bunch of them. First of all, the headline news, and I'll tell you, I'm not even sure what to make of some of the news that we saw here, but January non-farm payrolls blew the numbers out of the water, as you can see. Both non-farm payrolls and private payrolls came in way above expectations. Unemployment rate was slightly above expectations, 4% versus 3.9%. January average hourly earnings rose just 0.1% versus 0.3%. So I'm sure the Fed's keeping an eye on that. Not a whole lot of wage inflation there to report. January ISM manufacturing index 56.6 versus 54. November construction spending, and it was at right about 10 o'clock, saw a huge move up in both the stock market and in the yield, meaning money rotating away from treasuries. And the only thing really that, November construction spending, that's a big increase, but it's also November. It's from 2 months ago. So not sure if that had a whole lot to do with it. January consumer sentiment and the wholesale inventories normally, consumer sentiment can be a big mover, but it was just slightly below expectations, and wholesale inventories came in just below expectations as well. So I'll pull up that 10-year Treasury yield in just a minute. You can kind of take a look at that intraday chart. But that was kind of interesting. One other thing to point out is that while the non-farm payrolls and private payrolls for January were much better than expected, the prior month, actually the prior 2 months were revised. December was revised quite a bit lower. So remember that big number we had over 300,000 last month? I believe that was reduced back to about 220. I may be off a little bit, 220,000, 222,000 maybe. But so keep in mind there was a revision downward, because I was pretty surprised when I looked at the initial reaction today in the 10-year Treasury yield. Let's go ahead and pull that up. First of all, you can see the 10-year Treasury yield. Let me get an update, make sure I've got the latest here. The Treasury yield currently 2.69%. So we're finally getting movement up in that yield. And that means money is rotating away from Treasury. So that will help support an equity market to the upside. So that's good to see if you're on the bullish side of equities. But if we go into an intraday, I'm going to pull up the 10-minute 5-day chart. Look at this big move from under 2.66% up to above 2.68%. That was right at 10 o'clock. And at 10 o'clock, we had the news out about construction spending, which was really the only big difference when we look at the actual versus estimate. So I'm not quite sure what to make of that big move, but it still is welcome relief for the those who are on the long side in stocks, because there was that negative correlation, if you will. If you recall, back at the end of November, the 10-year Treasury yield was going down and the S&P 500 topped. Pull that chart up. Show you. We're going to get into earnings here in just a second. Here, look at this move on the S&P. But when you go back to the 10-year Treasury yield, it was going the opposite direction. And it kept moving down. And eventually what that did is it took the S&P 500 down with it. Now we're seeing the S&P 500 rising again, very similar to what we saw at the end of November. And when you go back and take a look at the TNX has been dropping. So is this going to resolve itself the same way? Or are we going to see the 10-year? Are we going to see that 10-year Treasury yield rising? So far, we're getting that rise on the 10-year Treasury yield. But if you're bullish equities, I think you want to continue to see that. Okay, let's take a look at earnings. There were a number of earnings out this morning. One big one from last night, of course, Amazon.com. Amazon did report earnings well in excess of expectations, $6.04 versus $5.55. You can see the others across the board were mostly higher. Cigna did come in a little bit light on their number. They also reported light on revenues and I think lowered guidance. So the trifecta on Cigna, not good. But overall, I think the action here, or at least the news here from an earnings perspective, pretty good. So let's take a look at what's going on with Amazon, because that is the 800-pound gorilla here. Also 800 billion in market cap. So pretty substantial company, obviously. Amazon down, you can see about 4% so far today. They beat on their top line, 72.38 billion versus 71.95 billion. Beat on the bottom line, as you saw on the slide a second ago, and now guiding Q1 revenues lower. So the stock did get hit volume heavy. So far, though, hanging on to its 20-day moving average. We've seen this plenty of times. And also, I think what I would be watching on Amazon is the low, these reaction lows that we've seen down around the 1600 area where we have been holding. If Amazon were to break down below 1600, it likely would be part of a bigger breakdown in the overall market, but that would not be a good development on Amazon. So watch 1600 to the downside. And in the meantime, what you want to see clearly is a move back up, clearing the high that where we closed yesterday. XOM, ExxonMobil, beat bottom line. They fell quite a bit short on the revenues, but market doesn't care. Stock up very nicely today, up almost 4%, certainly helping the Dow. CVX, another energy name. Chevron beat on the top line, beat on the bottom line. Very strong reaction here. And of course, the XLE, as I was mentioning at the top of the show, really having a nice day today, up more than 2%. And when you look across here, 64, 60, I kept saying 63, 64 was key support. We lost it. We came back up. We were looking at 63, 64 as resistance. Today, we're actually clearing that. So a nice little bullish change of a character here on the chart for the XLE. Other stocks reporting. Let's take a look at Merck, MRK. They beat top line, beat bottom line. They guided in line. But if you draw a line across here, this trend line that it was trending lower, it's breaking out and volume pretty good. So I think Merck looks pretty good here. Honeywell, HON, beat top line, beat bottom line, but guided fiscal year 19 revenues lower. And this is kind of the point I was alluding to talking with Mary Ellen earlier. It just seems like some of these companies that are reporting, that are warning a little bit or guiding next quarter lower are still getting positive reactions, which makes me think the market has moved beyond the next quarter and is looking more at the second quarter. However, with Honeywell, they actually guided their entire fiscal year 19 revenues lower. But again, perhaps the market is saying it was already priced in. Cigna, this was the one, this is probably the more disappointing report. They actually beat on the top line. I'm sorry, I think I mentioned earlier they missed. They did beat on the top line. They missed on the bottom line. And then they guided their fiscal year 19 revenues and earnings per share lower, but still only down 2.7% and quite a bit off its earlier low. So these companies, even though they're reporting not so great results, many of them still hanging in pretty good, which I think is good. A couple of stocks I mentioned at the top of the show, SYMC, this is Symantec. Look at the break here, trying to break out above the November high. Symantec had been, I'm going to show you this on a relative chart. This was a stock that had been underperforming the software space by a wide margin. Ever since they gapped down with this huge move down in May, that was earnings related, or maybe it was a warning, but that was a huge drop. And you can see the relative strength on Symantec just hasn't been there until today. So nice volume picking up. They did beat on the top line, beat on the bottom line. They guided revenues and earnings per share for fiscal year 19 higher. So looks like we're trying to get a breakout. And I think this could be significant for Symantec because it is in that software space, which until October was one of the strongest, if not the strongest area of the market. The last one I wanted to mention before we turn things over here to Mary Ellen, ZBH. This is Zimmer Biomet. This is another very strong performer today. Looks to me like the downtrend here has been broken. This is a stock within the medical equipment space. And when we look at Zimmer relative to its peers, it had been downtrending. I think this came as a surprise, really, to the market that that the company was able to beat top and bottom line. You can see relative to the S&P, all of a sudden strengthening. And when you look back, even though the market's been very weak, medical equipment stocks relative to the S&P 500 have been performing pretty well. So you got a stock now that's starting to outperform a group that has been outperforming the S&P 500. So maybe something to consider on a pullback. I think ZBH looks pretty good breaking out of this down channel. All right, Mary Ellen, we talked about earnings a little bit at the open of the show, and I know you've been watching earnings. I mean, do you have a theme out there? What do you think? What's going on?
Yeah, well, we touched on it briefly. Certainly one of the themes is how these companies are coming in ahead of earnings estimates that were revised lower. So we are seeing a lot in the way of companies that are coming in ahead of earnings estimates, and the markets are responding quite constructively to that, as you can imagine. So that is certainly one of the themes. What I'm going to be sharing with you now is a report that was put out by Zacks. This is a company that does quite a bit of work with as far as earnings and following earnings, because really quite common knowledge is the fact that earnings is and can be a very primary driver of the a stock's price movement. So what we are looking at here is the S&P 500. We can see the nice advance that the markets had. Certainly year to date, we're really advancing quite nicely. But the earnings story really is not as positive as one might expect. So what I wanted to do is spend a few minutes here, take a look at where we are with Q4 earnings. And I think it might come as a big surprise to a lot of people as far as where these numbers are coming in relative to certainly this time last year. And we can look at earnings where they came in. Last year, we had the benefit of the Trump-induced corporate tax cuts, and that was a huge boost to earnings last year. That, of course, has subsided. We also have other dynamics in play. So a lot of times with Wall Street, when they are listening to these earnings calls, management is talking about where the growth is emanating from, what their forecasts are going forward. And what will happen is analysts, of course, are going to really key in to what management is focused on. And the big report this year so far, Q4 earnings, management of these large, certainly the multinational companies, they're talking a lot about the fact that global growth is weakening, and that's a concern going forward. But let's take a look at where we are now. As far as so far, about 140 of the S&P 500 companies have reported their results. And what we are seeing is earnings that are up on average about 12.5%. And then revenues are up almost 6% over the prior fourth quarter of the prior year. So we're seeing about 70% of companies are coming in with earnings that are ahead of estimates. And while that certainly is healthy, we're running a little behind where we were at this time last year. So what we can certainly take a look at is what we are seeing currently now overall. We're certainly seeing about 12.5% growth, but the estimates as far as when the earnings season is completed is we're looking at earnings that are going to be up at about 11%. And so we are seeing the first quarterly earnings season decline since Q2 of 2016. So while earnings, again, on the surface are appearing to look quite constructive and positive, they are certainly quite a bit slower than we've seen certainly over the last 2.5 years. So let's take a look. There's one other estimate that I wanted to talk about, and that is, I touched on it as far as those companies that are coming in ahead of estimates. That is tracking below what we have seen of those same 140 companies that have already reported. That's coming in below what we saw for those same companies this time last year. So interestingly, one other thing that I did want to mention is I talked about Q4 earnings beat percent. That change is the lowest that we've seen since Q4 of 2016. So again, global economic growth is certainly one of the big key components that's being talked about. And also there were headwinds last year as far as currencies and exchange rates. So we saw that. We're going to get into this a bit as we talked about what's hot and what's not. But some of the bigger name companies really got hit. Apple, certainly a big part of their discussion as far as iPhone sales being reduced was because of global growth slowdown in China. It was all about China. Caterpillar, NVIDIA, these are just some of the many larger companies that have cited global growth recession as not only reducing their Q4 earnings, but also reducing their outlook going forward. So it will be interesting as we continue to proceed with earnings. We're about 1/3 of the way through, and as this earnings season continues to progress, it's going to be important to pay attention to management's revisions downward going forward as far as the rest of this year, because that is at some point going to have an impact on the how these Wall Street analysts, how they put out their estimates going forward. And of course, that's going to have a big impact on the broader markets. So that's where we are as far as earnings now. Let's go ahead and jump in as far as taking a look. This is going to be for this week so far and what's hot and what's not. Tom talked about these real estate stocks. These are in particular the REITs, real estate investment income trust, and we can see the advance that this group has had. It's actually up 11% last month in January. And for those of you not familiar, these REIT stocks, they pass their generated income. They have properties that they manage, and they pass the income generated from this on to their investors. So these stocks are going to be very high yielding. We can take a look at a couple of names as examples as far as what has been working. This first company is BXP. This is Boston Properties, and they are a regional manager of primarily commercial properties. The company actually has a very high yield. They have a 2.9% yield, and they do office and retail space in the Northeast. And we can see how the stock really has had this big advance. It's up about almost 3% for the week. And as we can see, the stock did pull back down to that 129 level. Interestingly, buyers are coming in. So while the stock is down 1% now, it was down quite a bit more earlier. So it does appear, we can see the RSI is up there in that overbought position. And going back historically, that can be a signal that at some point, going back, certainly December was a tough period for the markets, but at the very least, we did get a pullback. So we are overbought, so that is certainly worth noting. Another REIT that we can take a quick look at here, EXR. This is Extra Space, and they have storage, self-storage facilities. Not quite as significant on the advance, and it is pulling back a little bit more, 2% today. And this is indicative of what you'll see with the broader markets. You'll have haves and have-nots. BXP, Boston Properties, gained quite a bit more over the last month. It's not pulling back as much. It's definitely a stronger stock. We can take a look at VNO before moving on. This is a retail property provider, and this particular stock just now broke above these key areas of potential resistance. And we can see it's another name that pulled back, and buyers are coming in. This company provides a 3.9% yield, and it's up about 3% on the week, but not quite as strong, certainly not as BXP. We can end it with O on these REIT stocks, and this is Realty Income. And this particular stock is certainly one of the strongest, and I'll tell you why. The stock hit a new high in price earlier this week, and the company is also doing quite well. We can take a look at this volume yesterday on their advance. Very big volume as far as investors coming in. The stock is a bit overbought. The RSI is up there above that 70, just potentially starting to turn. So we're going to want to keep an eye on that. You don't want that RSI to turn negative below this 50. And then also we can take a look down a little bit further, and we can take a look at the MACD. We've had that positive crossover above that net neutral, and the MACD is still acting really quite constructively. This type of crossover, this black line down through the red, combined with an RSI and of course a price break below these key simple moving averages, is the negative side. That's what you're going to want to look for as far as the potential advance. But for now, these REIT stocks still look to have a little more room to go. And so let's go ahead and move on to the next area as far as really what worked last week. And we can take a look at some of these cannabis stocks. For those of you that follow the markets closely, you'll know that this has been not only a hot area for the year, but also quite volatile. This first name that we can take a quick look at is APHA, and this is Afria. And this particular stock was up 22% for the week before, actually, let's take a look. It's up another 11% today. This is a takeover target, and this is the first cannabis company that was not only listed on the Canadian exchange, as a lot of these cannabis stocks are, it's also listed on the US exchange. So we can see the stock has had quite a significant advance on that takeover prospect. Today, the stock broke up above this 200-day simple moving average, and that is constructive. We can go back historically to the September period, see the advance that the stock had subsequent to this prior breakup here. RSI is positive, trending upward, but it is just now touching into that overbought area. So while the stock could potentially trade a bit higher here, we can see that it is just getting into that overbought. MACD just trending positively now in a very constructive fashion. Let's go ahead and take a look at another well-known stock in this cannabis space, and the ticker symbol is CRON. And a lot of these companies are not coming out with positive earnings quite yet, but the prospects are really super strong. They've captured the imagination of a lot of investors. Kronos, in December, they announced that they entered into an agreement with Altria. And this is where Altria came in and is now part owner. We can see the stock is hitting a new high, up another 7% today on top of a 23% move going into the open. So we can see really the advance. Now, this one certainly is overbought, but just to show you, stocks can stay. This is the RSI up above 70. They can stay in this overbought position for quite some time and still make an advance. But just taking a look, it is quite extended above that 10-day simple moving average. We certainly would expect a pullback on this one. Let's take a look at some of the mega cap stocks. This is going to be, unlike these cannabis, these stocks we're going into now are going to be all about earnings. So this first one that we can, actually GE is one of the few that's not earnings related. This is General Electric, and we can see the stock is having a nice advance. It's up 12% so far this week. This is more of a turnaround story than earnings related. The company announced earlier this week they're going to sell their stake in Baker Hughes. They're also going to sell some non-core assets in GE, industrial and financial. The markets like it, the stock's jumping, but it still has room to go before really being able to advance further. I would like to see it break up above this 200-day simple moving average. RSI is trending positively, as is the MACD. Let's go now into these earnings related moves. Facebook, and all of you may have noted that this stock did come out with earnings yesterday. Take a look at that gap up. The company was up 12% on their report. Their sales were up 30% year over year. While very constructive, it is their slowest pace ever as far as their revenue improvement, but the stock was so depressed price-wise, it was still, the earnings report was met with buying. The company also is going to have a lot in the way of expenses this year as they continue to comply with their data handling. Of course, that's what caused this big drop here back in August. They saw 9% growth as far as their number of daily active users. This is what the market's key in on. They want to see active subscriber growth as well as usage. And the big growth story here is Asia Pacific. This company has a company that is Instagram. They're growing very big in Asia. And so that really got investors excited as well. Let's take a quick look at Apple. This is another one, of course, that came out with earnings. And we can see this reversal here on their earnings. Now, revenues were down year over year, but earnings were up 7.5%. This is another mixed story where their iPhone sales were down year over year. The company cited slower growth in China, strong dollar as far as headwinds. However, they're seeing record sales in their Macs, and also their wearables and accessories sales are up 33%. So what we can see here is the price gapped up on the earnings, broke up above this 50-day simple moving average, which is constructive. We still have work to do, but the RSI is positive and the MACD just going into positive territory. So we're looking at a stock at 167. We could see an advance up to 190 before it runs into potential resistance ahead. But today we're seeing a little bit of exhaustion. It may very well pause here before potentially moving higher.
Hey, Mary Ellen. Actually, on a stock like Apple, where you get this breakout above the 50-day and the MACD is getting that center line crossover, and you know it does look like maybe it's stalling a little bit. If you've been on the sidelines and Apple is a stock you want to own, is this the time to jump in, or do you think that maybe pulling back somewhere into that 160 area might make more sense, or what would your strategy be with Apple?
Yeah, that's actually a great question. And oftentimes, really, it can be helpful to take a look at an intraday. For those of you that are trying to gauge your buy point as far as your entry, take a look at this, because on the intraday it is oversold, and what you want to key in on is go back to periods such as here where we had a multi-day, about a 3-week advance. So we want to use those same metrics as far as your RSI coming in to positive territory, your MACD having a nice positive crossover. This intraday 1 hour chart is telling an opposite story here. Your MACD is potentially trending downward, RSI potentially trending downward. This is the kind of move that you want to capture. And so realistically for right now, we do appear to be pausing, but I would potentially look for some sort of a pullback and then a advance out of that pullback.
Okay, so yeah, I want to, can I show a chart?
Absolutely.
Right, and then you can take it right back.
Sure.
I know software was an area that you also were going to go into. And so I wanted to just show everyone that over the past 2 years, more than 2 years, that this is a chart of software relative to the S&P 500. So there's no doubt that this has been an area that has continued to push the S&P 500 higher over the past 2 years. And even though we've seen a little bit of weakness and a little bit of hesitation, I think if you go back and you look, we've had periods like that before. And I just wanted to kind of set this up because I know you have a number of software stocks that you were looking at that have really had some really good weeks, starting to show some nice leadership. So I thought, before you got into that, I would just show the overall relative strength of the entire group. And now, if you don't mind, you can go through and show some of your stocks that you see this week.
Tom, that's a great observation as far as the software stocks, and it has everything to do with cloud computing and the ability for companies to share their the software, and they've had a lot in the way of development. Another really big area with software has been data mining, the ability for the software to be able to collect this data, and then organizations can really manipulate and use it. This is RNG. Was not going to review it today, but it's a prime example of what Tom was showing. Take a look at this growth going back to 2017. Each one of these bars up here, these are earnings reports. This is very significant, similar to a lot of other software companies that have consistently shown growth and superior earnings as a driver to their upward moves. Let's take a look at this week, some of the bigger movers. The first one we can look at is SCWX, and this has been an area really more recently that has picked up. This is a company that protects from cyber attacks. Take a look at this. It's up 34% this week. The big news here is they're coupling with Dell as far as creating a product that is going to help with cyber security, but it is also indicative of the moves that we are seeing in cyber security related stocks. Let's take a look at one other one that is having a nice week, CYBR. This is a stock with my company that's on our suggested holdings list. We can see this nice advance this week. The stock broke out of this nice base. This is CyberArk software, and it all has to do with last week. Wall Street analysts came out with a report, talked about companies this year that are going to be increasing their spending in these cybersecurity related stocks. So we talk about stocks emerging out of bases. Take a look at the volume, a nice pickup on the volume as the stock broke out. RSI is positive, as is this MACD. While the stock has had a nice significant move this week, it does still appear to be in a very confirmed uptrend. And we can take a look at another stock that is in the software space. This is going to be all about earnings. Ticker symbol is NOW, another big winner. The stock gapped up 15%. This company helps corporations automate their IT, and they beat on earnings and revenues, 80% year-over-year earnings growth. 10 Wall Street firms announced after their earnings report yesterday that they have the stock at a strong buy, outperform. One firm has ServiceNow as their top stock pick for this year. So you see these companies, they gap up after they report their earnings, but oftentimes investors think they may have missed the move. This is really many times, provided you have a positive market backdrop, it's just the beginning of the stock's potential advance, because what will happen is they come out, they announce their earnings, talk about their growth drivers, and analysts come in and start revising their estimates higher. So you potentially NOW, even though it's already had a big move, does appear poised for more. We can look at one last software stock, COUP, and let's go ahead and pull that up. This stock is Coupa software, and the company broke out of an very nice base here yesterday. So we can see the stock in October was at this prior high, and actually we can go back to September. That's when a lot of these software stocks peaked. We can see this very nice sound saucer-like base. Stock broke out. Take a look at the volume. You want to see a volume as the stock breaks out of a base. Currently a little bit overbought, and it does appear to be extended. I would wait for a pullback, but certainly overall quite healthy. And one other area that we can take a look at, consumer staples. I'm only going to share one stock in this space, but there were a number that were actually consumer staple, because a lot of those stocks really have not been participating in this rally. They were a little bit depressed. But what we're looking at here is Altria. And earlier I talked about Kronos, and that was a cannabis company that is part of Altria now. This is we can look at the stock. This particular company did take a look at this gap up here, and we can see that this particular stock did come out with earnings. The big news with their earnings release, because you can see this severe drop here, analysts revising estimates downward, that has everything to do with tobacco and cigarette sales very much declining. They're still on the decline, but this gap up here is in response to the company's announcement of an subsidiary that they bought last year. It's JUUL. And for those of you not familiar, Juul is the manufacturer of these e-cigarettes, and they are the most popular, certainly among college-age students and individuals of that age. But Juul sales reached 1 billion in sales, and that's up from 200 million in sales for Q4 2017. Huge jump. Actually, I want to correct that. Altria bought 35% of Juul in December of 2018. They are not the sole owner of the stock of that company, but we can see that it is still going to be finding a tough time here as far as breaking up above this downward trending 50-day simple moving average. And this stock does not look constructive to me, while that Juul sales was
a listing here. This is the last week in technology, and you look down here and you see semiconductors, which haven't been very hot throughout the week. But if I go back and change this from a 1 week to a intraday and go back down and take a look, you'll see that actually semiconductors having one of the best days today. One stock, of course, is Intel. that has been performing really well. But there's also some others that I know Mary Ellen wanted to touch on. So let me pull these up for you. First up is going to be Advanced Micro Devices. AMD did report earlier this week. Really nice move. And look at the volume coming in. This is the heaviest volume we've seen on Advanced Micro over the past 2 to 3 months. And actually maybe even a little bit further than that, maybe going back to September. And we are taking out some important highs, especially most notably that December high. So while AMD may be struggling a little bit today, it has been a very hot stock this week since its earnings report, and is continuing to look stronger and stronger. You can see that PPO also pretty strong. Another stock within the semis, KLA 10 Core. So again, over the past week, semis not doing a whole lot, but KLA 10 Core having a very, very strong week. Beautiful move up, breaking out of this sideways base. I think this is another one that looks good as we move forward. PXLW. This is Pixelworks. Huge day yesterday. So the overall week was kind of flat, but yesterday was worth mentioning. Stock went up from about $3.30 to about $3.80, pulling back a little bit today, but you can see for the first time in the last 4 months or so, we now have a PPO that has moved into positive territory. All right, there were a couple of industrials. So let's talk about Harris, HRS. HRS came out with earnings earlier this week, and you can see the market liked it. Stock was trending lower, had moved above the 20-day moving average prior to its earnings report, and then came out with earnings. The market loved it. Stock ran from 142.5 to 155, so probably about 8 or 9% with its earnings report, and so far just kind of consolidating in a flag formation. And as Mary Ellen pointed out, a lot of times these gap ups just start the rally. They don't end it. So I'd be looking to see first, can we break back out above, say, 156, or do we go back down and take out these lows? If we take out the lows, then maybe we'll fill this gap. But otherwise, it looks to me like Harris wants to go higher. Ingersoll Rand, IR, is another one that having a very strong week here, breaking out above the recent highs. Coming off of that December low, we had a nice move up, sideways consolidation, and look at the volume expand as we make the breakout. Looks like Ingersoll Rand maybe wants to take a run at overhead resistance in this 104 to 106 area. Okay, let's see. In healthcare, just going to talk about a couple of these. ANTM, I know, was a company that had reported some earnings, and you can see a huge move in ANTM. And I always like to pull up charts on relative chart. You've seen me do that many times here. Take a look. When you look at the healthcare providers, we have not gotten close to a breakout, but Anthem has broken out, and look at the volume coming in. So you've got yourself a leader for sure. Here is Anthem relative to the index, relative to the S&P 500. And then healthcare, which struggled for about 6 weeks, is started to turn back up again. So as long as the strength continues in healthcare providers, I think ANTM is a stock that you've got to at least keep on your radar. Beautiful. Again, that volume really speaks to me, because that's how you can see accumulation by institutional investors. They can't accumulate a big position without volume. So the big volume gap up and breakout, I think, is very important to keep in mind. All right, let's talk about some stocks that were not hot over the last week. And I tell you, it's hard to find them. I know Mary Ellen alluded to that earlier, and we've talked about that the last few weeks. We've been such a move to the upside. It's hard to find, stocks moving lower, except kind of on a case-by-case individual stock basis. Here's Illumina. Illumina did go down, test some recent support, so that's a good thing. But it's only bounced here the last couple of days after a pretty steady move down to test support. And look at that volume on the move down. Has not been a great week for Illumina, but so far holding on to support. Tandem, TNDM. This is a stock that has, I wouldn't say it's weak, maybe weak in the last 2 weeks because it hasn't been able to break out. But I think short term, it's just consolidating off of the uptrend. So sometimes you can have weakness that actually is an opportunity. It's not something to avoid or to short, but sometimes you got a stock that looks pretty good, nice volume coming in on the move, and it sideways consolidates before another breakout to the upside. So I would watch Tandem, even though it's not participating, not having a great week this week. I think it is consolidating. I think this is constructive, holding above that rising 20-day moving average. And so Tandem is one that I would keep an eye on. How about Caterpillar, CAT? big gap down to start the week. Now, it has rallied back, so it's gotten a lot of those losses back. But today it's down again, 1.3%. Once again, we're talking about a market that keeps moving higher, having a huge week, and Caterpillar unable to keep up and keep pace with the stock. Telecom equipment, Ciena. Now, this one is one that's pulled back, but I think this is constructive. Beautiful move up, heavy volume, pulled back, held the 20-day moving average, and is now trying to turn back higher. I would not be surprised to see Ciena make another run at that recent high at $40. Juniper. Now, Juniper came out. Their earnings were not pretty. It's a big gap down, set a new low going back the last 6 months. And in a market that we've been witnessing with this huge rally, that's the last thing you want to see on one of your stocks is a new low coming in. So Juniper on the big volume move to the downside, perhaps that's an exhaustive candle. You've got a hollow candle after the downtrend. But if we make our way back down and lose that 25 area, I'd be careful with Juniper. Let's see, some other semiconductors. We talked about some that were hot. Well, there are also some that are not. That's why, as a group for the last week, we haven't really gone anywhere. NVIDIA has rallied back off of that low when they came out with their earnings earlier, but the move back up so far being limited by that declining 50-day moving average, also the 20-day moving average sitting there. So nice rally the last few days, but still overall, not a great week for NVIDIA. SLAB, Slab, this is Silicon Labs, another one gapping down, testing price support, so far holding. Last couple days, not bad, but overall, pretty rough week. Qualcomm struggling as well here. You can see Qualcomm with the move down. I mean, there's just been really no strength coming in. Even off of the December low, we saw almost nothing to the upside in Qualcomm, and now it's breaking to new lows. Not been a good week. Really hasn't been a good 3 or 4 months for Qualcomm. All right, let's take a look at retail. Now, keep in mind, yesterday, if you weren't here listening to the show, the next 3 months, retail is one of the best areas from a seasonal perspective. I'll take a look and show you this as a quick little refresher, if you weren't in. The XRT, which is a very diversified retail ETF, if we go back over the last 14 years, look at February, March, and April. The tendency is for these 3 months to go higher. That's what this is telling us. 75% of Februaries have been higher over the last 14 years, 67% of March, 75% of April's. And you look at all the other months, those three really stick out. Then look at the average returns for these 3 months. 2.5%, 3.9%, 2.7%. So as we head into February, just keep in mind, this is one of the best areas of the market seasonally. Why do I bring it up? Well, if we take a look at some retail stocks, you can see that haven't been very good here in the second half of January, and especially some of them this week, really weak. Shoe Carnival, huge move to the downside. Now testing the reaction low that it saw back in the second week of January. And again, keep in mind, we're entering February, and this is the best 3-month period for many retailers. That's one. How about GES? This is Guess. Another poor week, but we're at support. Now, I haven't looked at all of the seasonality on these companies I'm giving you, so you might want to check these out. But if they also are seasonally strong February through April, they might be worth considering given how weak they have been this week. BJRI, this is BJ's Restaurants. This is more in the restaurants and bars area, but you can see another stock moving down, testing that December low at a very, very key area. The problem I have with BJ's, I know it's at support, but when you look at this on a relative basis, restaurants and bars are just about ready to break out, and look at what this stock has been doing. So what does that mean? It means you have one of the worst restaurants and bar stocks out there. So you want to be really careful with BJRI. A couple of other stocks on the restaurant side, still kind of retail oriented. Taco, you can see another one that has just been beaten up for quite some time while the group's been going higher. And once again, you're going to see on this relative chart that it is going to be very problematic. The one that had been doing extremely well and reported some great results was Loco. I actually like this pullback. There are some pullbacks I would stay away from and some that I would consider. This is a company that came out, reported great results. The stock had moved up in the first half of January from about 15 to 18 and a half. Now it's pulled back to 16. And if you look on a relative basis, this was one that recently broke out versus the restaurants. And this pullback could be somewhat constructive for possible entry. I think we may have Mary Ellen back. You back with us?
Tom, thank you so much for picking up the pieces and wonderful job. I've been watching you, and yes, these restaurant stocks, it's definitely a mixed bag, but by and large, not performing too well here. We can take a look. Let me go ahead and share my screen ever so briefly. And
while you do that, I have a question for you, though, because I know you and I talked before the show, and I just want to get this point out there. Sometimes stocks that are having a bad week in an up market is a bad thing, but other times it can be a good thing if it's a stock that has been performing pretty well technically and then simply taking a break this week. And that's what I was kind of pointing out maybe with Loco, is that might be one that's simply taking a break after a huge move up that we saw at the end of December into the middle part of January.
Yeah, and actually that is a very good observation, because we can see the stock did have a very significant advance here in the end of last month, and it is pulling back rather orderly. You want to make sure the stock continues to find support at this upward trending 50-day simple moving average. A lot of times you can go back historically, and this is really typical of a lot of these retail consumer cyclicals. They'll come out with earnings, spike up, and then really just sit around and just mark time until their next earnings release. This particular advance here is not earnings related, but we can see that it is pulling back quite orderly. So you want to look at how the stock has behaved historically and key in on that as far as finding a potential buy point.
All right, sounds good. I don't know if you had any others. We probably can bring up that.
Oh yeah, we have one last one. We can take a quick look. We can see this gap down on this stock. This happened earlier this week. The company came out with earnings. This is EAT. This is Brinker. These guys own Chili's and Maggiano's, a national chain. They had solid same-store sales in the U.S., but Chili's division, their international, saw a sharp drop in same-store sales. We can see the stock dropped. Once we break this 200-day simple moving average, take a look at this volume. These are institutions, they want out, more downside potential ahead. It is a little bit overdone to the downside. You may get a little bit of a bounce here, but once we break these key simple moving averages, the downtrend is set. So I would not be a buyer, certainly on this drop here.
Yeah, I would have to say, looking at that chart, that the chart's a little chilly, wouldn't you say?
Bottom.
There we go. That's a good way to end it. Let's go ahead and get that summary slide up, and then we'll pull up the poll, because figure with what's hot and what's not. Let's see if our audience knows what's been the hottest area of the market over the past, I don't know, last month or so. I think it was a year to date that we were asking. And all of the groups listed, by the way, are having a really strong month of January. But the question is, which one is having the best month? And I know, Mary Ellen, you were surprised when I told you before the show which one it is. And our audience did not get it correct. And they went with the one you liked, oil equipment and services, correct?
Yes. And it certainly seemed to make sense given the fact that energy stocks have been certainly the top performers. So why don't you do the reveal?
Yep, I'm going to do the reveal, and I tell you, we're going to do it this way. I got the chart up, so I'm going to share the chart with you here in just a second. I don't want to, ruin the party. I'm sure everybody's sitting, on the edge of their seat, pins and needles kind of a thing. But there is one company that is up 30% so far year to date, believe it or not, on this list. And it's not oil equipment and services. So let me get this chart up here. I'll get it here. Just bear with me a second. I know this is killing everyone.
The suspense is killing us, Tom. We should have a little drum roll in the background just to.
I know. Okay, here we go. Paper. Paper. I think it was about 18% of your 20% of you. I think it was about the middle choice went with paper. But paper is, as you can see, up very nicely during this month. Most of it, as you mentioned before the show, Mary Ellen, the international paper heavily weighted in this index, and that they've had a great month. I think International Paper might be up 20% or something for the month, but the overall index is up about 30%. And the way you can figure this out, by the way, I don't know if any of you cheated. Not allowed to have cheaters on here. But if you go in and you look at the sector, I could have just gone straight into industry, but here you at the bottom, you can pull up the industry table view, and then under here, you can pull up year to date. And so this is a way you could have cheated. So internet, as you can see, was one of the choices, doing very well. Gambling, up 21%, doing very well. Brewers, 18%, doing very well. Oil, equipment, and services was the number 2 at 22%. And then finally, all the way down here, look at paper, up 32.3% year to date. So interesting stuff. Thought we'd have a little fun with that. All right, I am going to go ahead and start the 10 in 10. So let me go ahead and pull up the first stock, and that will be First Solar. And then we will get into the other 9 stocks. All of these will be choices or suggestions that you gave in the chat room. So let's take a look first at First Solar. Now, I actually like the chart. I know it's having a rough day today, 3.5%, but it's been going straight up. As it pulls back, if the uptrend is going to continue, the 20-day moving average should hold. And you can see the green arrow here marked a beautiful test of the 20-day before we went back up to a new high. Now we're moving back down again. The breakout level was at about 48.5. We're almost there. And then the rising 20-day from underneath is at 47.90. The recent high, we were up over $51. So I know sometimes when I say wait for a pullback, and you think, well, what if it doesn't pull back? Well, if it doesn't pull back, I generally don't buy it because I want to try to manage my risk. In this case, here's a stock that is pulling back, and if I was a fan and I wanted to buy into First Solar, I would do it on a pullback rather than chasing after a move to the upside. So I think First Solar looks pretty good here. I'm going to say right about this 48 level, 47.90 up to about 48.50. I think that's the range where First Solar hopefully will find a bottom and start to turn back to the upside. But as you mentioned earlier, Mary Ellen, a lot of this is market dependent. I mean, if the market were to roll over and start selling off, a lot of stocks go down with the overall market. But if we stay strong, I would expect First Solar to turn in this area.
And then, the next one is HAL.
All right, Halliburton. Like the energy group, we're starting to see some strength here. I mean, Halliburton, nice move up off of the December low into the middle part of January. And I'm looking at what looks to be maybe an ascending triangle. So let me annotate. So in order to have an ascending triangle, first you have to have a prior uptrend, because an ascending triangle is a continuation pattern. You can't continue a pattern if there isn't a prior trend, or you can't continue a trend if there isn't a prior trend. So let's take a look here. There are some equal highs coming across. And then right in here, you can kind of see those higher lows. So right now, off of this uptrend, I see an ascending triangle, a breakout, not a huge measurement, 32 and change down to about 30. So maybe we'd be looking at about 34.5 or so. And if you look at the breakdown that occurred back, this would have been back in November on this huge volume move, we've got resistance up around 34. So if we make this breakout, head to 34, might be an area to consider taking profits, see if we can get through that resistance area.
And the next one, ROKU. Roku.
Yeah, Roku. I tell you, that was a stock that was absolutely on fire and then couldn't catch a bid for a while, and now is back on fire again. But Roku's been very strong, beautiful move here. The stock went from 30 to almost 45 in 2 or 3 trading days, which is amazing. Sideways consolidation since. It is trying to, well, it is actually breaking out above that prior high. So I think for something like Roku, and I will continue to say this, short term, a lot of the signals are bullish right now in the market. Longer term, they're much more suspect. So I think as long as we continue to hold on to the 20-day moving average as we rise up, I'm okay being long stocks like this. Play the trend to the upside. That's okay. Just beware if the short term begins to break down that we have issues from a more intermediate term, looking at many charts. So I like Roku. I think this one is probably going to go higher, but I would watch the 20-day. That would be my closing stop on the stock.
Okay, yeah, next one, cannabis, TLRY.
Tilray. Tilray. Is this the one that Constellation Brands got involved with?
Yes, very good. Mm-hmm.
Okay. Yeah, I mean, I think that after a huge move, I mean, this is a stock. When you get a stock that moves like this, it definitely needs consolidation. I mean, this was just frantic buying, and look at the volume. If you look at the chart and can't tell, look at the volume compared to everywhere else. I mean, this was just panic buying. We usually don't see panic buying. We normally see more panic selling. But I do think that the stock is starting to work its way back down to a more reasonable valuation. And I guess you could say cooler heads prevailing now. Short term, I think that this support area is probably one, now that it's been holding for about 2 months, is one that I would keep an eye on. That's probably around the 65 area. So as long as Tilray continues to trade above that, I'm okay. I think this is one of the better stocks out there, although technically, I don't think right now it is one of the better stocks out there. I think Kronos is one that I've talked about in the past. I think looks pretty good. But currently on Tilray, I think it's between 65 and 100. We're sitting almost right in the middle of that range at 82 right now. I don't know that there's a trade here for me, but the closer it gets down, moves back into the 60s, I think things are starting to improve on a reward to risk basis.
And then XME.
All right, let's take a look at an ETF, the metals and miners. Nice move up. I've talked a little bit about the materials area and how, especially with the dollar weakening of late, that's put a little bit of a bid under these stocks, and in this case, the ETF. This is another one where when you see pullbacks and you see it holding 20-day moving average and the 20 crossing above the 50 and the PPO going positive, all of these things are things that you normally see with an uptrending stock in the short term. But once again, if the dollar strengthens, we see the market start to roll over, I would pay very close attention to the 20-day moving average. I don't want to get swept up in a longer-term downtrend. So you can still stick with this short-term uptrend, but if it does reverse, beware.
And then ATEN, A10 Networks.
All right.
It's in that soft
nice, yeah, nice move here in January. Pretty good volume. Took out the recent high. We had multiple tests here at $6.70. Kept going through intraday, but couldn't close there. Yesterday, the volume picks up and we get that close above it. Now we continue it. I think it looks to me like we're going to make a run for that earlier high. So let me annotate this. And that was a pretty big high because you gap up on heavy volume and fail. So I think as we get up there, my expectation would be that 710 would be a key area of resistance. If I was short-term trading it, buying it off the 20-day, I would sell it at price resistance, consider getting back in on a 20-day test.
We have Tesla, TSLA.
Yeah, and I know there's a question, and maybe you can address this one later as well, Mary Ellen, maybe when I finish here. But I know that Tesla is one that we spoke about back in December as being a company that looked really good. They were almost ready to make the breakout up around that 380, 390 level, failed, came back down, has actually gotten closer to support, and has started to strengthen again. Let me pull the chart up. And I still believe if we get that breakout, that 2019 could be a huge year for Tesla. But now, unfortunately, last month it was up closer. And I'm going to pull this one up on a weekly chart so everybody can see what I'm talking about in terms of the longer term picture here. All right, so you can see the recent resistance at about 380, 390. And I know that when we had talked about this back in December, I had mentioned if we get that breakout, I would be extremely bullish of Tesla because I love stocks that do this, that sideways consolidate for a while and then make a breakout. And especially if news comes out, you get big volume. I think that can start a period of accumulation that can lead the stock a lot higher. Currently, though, I think right now we're in this, going back to the last couple of years, I think we're in this trading range. I would be a buyer either at support or on a breakout above 380. We'll see which one we get to. Right now, we're in the middle. I haven't really traded these swings back and forth on Tesla, so I would not be interested in doing anything with it in the short term. But again, longer term, I would watch this trading range because I do think it could be very bullish for Tesla if we get that breakout.
And we have NEPT.
All right. I think they just broke out. Well, broke out of this downtrend, I guess, back earlier in January. I think 320, though, is pretty good support. Look at the volume that came in after the gap up. Buyers, when you see these tails to the downside, that's as far as it went to the downside, and then buyers started coming in. So when you get down to 320, maybe 315, that's an area where now I believe we have seen some really good support. So I'm going to draw a line there and there. This is an area when the stock pulls back that I would be interested as a buyer. And to the upside, I think if we get back up and test that high, that's where the sellers came in and took over. So for now, let's call it 315 up to about 380, maybe a couple pennies above 380. I think that's the trading range. If I had to do something current price, I'd probably be a buyer, but I'd prefer maybe to see if we can get a pullback closer to that 320 level.
Then we have RIG.
Yeah, Transocean.
Yep.
Let's see. Well, it's in a flag. Nice move up, sideways consolidation. But, I mean, off the downtrend, I need to see this breakout. Good day today. Maybe we'll get it today. But what I'm looking at is the uptrend followed by this period of consolidation, which is between 8 and 9. Very similar to GE, by the way. That was the same price range that GE was in until it finally made the breakout to the upside. And I'm not trying to relate RIG to GE, completely different businesses. But just from a price perspective, downtrend followed by a move to the upside and then some reaction highs to try to clear. But I like RIG if we can get a breakout above 9, especially because the XLE has been, and I think I talked about this during my seasonality earlier this week, the XLE tends to outperform over the next couple of months. This is a strong period of the year. I think February, March, April, energy tends to do well. So if you get a breakout, not only is it good technically, but also from a seasonal perspective, you might be able to get some tailwinds from that as well.
Okay, last one is AFL.
All right, AFL. All right, I don't like today's candle. I'm going to stretch this out a little bit. I mean, just looking at it, if it ended like this, I'd be a seller. Let me see if, yeah, anytime you get false breakouts and reversals, that makes me nervous. And because when you're getting a breakout, technically, not too many people are going to sell a breakout. If you're a technical trader and you're on a breakout like we were yesterday with heavy volume, I would have been bullish. I would not have been thinking about selling just as I'm getting a breakout. So it always makes me worry when you get tails up above major resistance and they doesn't hold, you got to think to yourself, who is selling? And it could be that you've got market makers who have institutional clients looking to exit a position. And this is the best time to do it, is on a breakout, because it triggers technical buyers. So you have buyers coming in. If the market makers need to unload shares, they've kind of got a nice big pool to sell into. And so when you get the reversal, it makes me nervous. Also on this higher high, you can see the PPO rolling over. I just am a little nervous here on this one. I know this doesn't necessarily mean this is a long-term reversal. It could just be a move back down to the rising 20-day moving average. But as a short-term trader, I don't like to hold if I think a stock's going to go down. So I'm a little nervous, but we also have to see how it finishes today. This is an intraday candle. It could be that we close at 48.50 and we get that breakout. So I think this is a stock that the close really is going to matter today. I would watch it into today's close. All right, and that is it for the 10 in 10. And those are the stocks that we just went over. Appreciate everybody submitting your requests. And let's take a look now at the next market update, see what's been going on here. I'm going to pull it up similar to how I pulled it up at the beginning. We'll get this candle glance. So you'll be able to see the same things we talked about at the beginning of the show. And let's just see if anything has changed. All right, well, we've got the Dow Jones up 113. I believe earlier in the show is up 175. So we are pulling back off of earlier highs. The S&P still above 2,700, still up for the day, up 5 points, but off of its earlier high. The NASDAQ now has actually gone down into negative territory after working its way back up into positive territory. Remember, the gap down, that index gap down mostly because of Amazon's weighting and the huge move down in Amazon. But the overall index still moved into positive territory. That has reversed. Russell 2000 almost at 1,500, just above 1,500, hanging on to a slight gain. 10-year Treasury yield, though, still really nice action today, up 6 basis points. Yesterday, I was really concerned about losing 6 basis points. Well, we've gotten those back. But if you're looking at it from a bullish versus bearish scenario for stocks, you really want to see this 10-year Treasury yield continue moving up, because that signals rotation out of treasuries. That could help fuel the market going higher. Volatility still down in the 16s. A big reversal off of 16 would be bearish for stocks. A break below 16, in my opinion, bullish. Energy continuing to lead to the upside. Real estate, you can see I do not like this candle today on real estate. Huge uptrend. When I get a reversing candle like that, that is a bearish engulfing candle. If that holds into the close, I think we may have seen a short-term top on real estate. Not long-term necessarily, but short-term. Broadline retailers weak, as I mentioned. Amazon down 72 points. No way you're going to see broadline retailers having a good day when Amazon gets hit like this. And then two of the better performers in the S&P 500, Symantec and Zimmer Biomet, both of these stocks reported results that beat expectations, stocks moving higher as a result, and as I mentioned, leading the S&P 500 today. Okay, Mary Ellen, we are going to go into our final segment of the day, and I thought what we would do today is look at predefined scans. I know you said that sometimes you'll look at predefined scans for some ideas and maybe some opportunities out there, so I thought maybe we would each share our strategy of the predefined scans, maybe some of the things that we might look for in coming up with some ideas. So what do you think? I mean, I figure you got about 6 or 7 minutes to share. What do you like to look at on predefined scans?
Absolutely. The predefined scans on StockCharts.com are really powerful. And you can tell that there was quite a bit of thought put into precisely what the screens are designed to do as far as technically putting you in front of these stocks that are potentially on the move. So what we're looking at here are these scans that are predefined, and the upper portion are the bullish screens. And then as you scroll down, you can take a look at some of these preset bearish screens. So what I'm going to do is highlight some of the screens that from my work have proven to be quite powerful. So let's go ahead and bouncing around a little bit here, but we can see on these predefined scans, what I'm going to do is focus on this first one. This is the new 52-week highs. And when you're looking at stocks, you're looking at the market, you want to see where the strength is, where those better performers and those stocks that can potentially move higher. New highs is a very, very good place to hunting ground, if you will. So today we're seeing 275 stocks, and over here it's broken down by the various indices, NYSE, NASDAQ, over the counter, and so forth. But really, you can even use the mutual funds. I'm just going to click on 935. Now, bear in mind, there are about 10,000 mutual funds out there. So while the number may sound significant, it's not. Indeed, it's probably, this is about 1%. But let's go ahead. I'm going to click onto the mutual funds just to show you quite quickly outside of the stock market where you can see the strength is. And you can see a lot of these bond funds are hitting new highs. For those of you that follow interest rates, yields have come down significantly. So you're seeing a lot of these bond funds picking up. But take a look here. We can see AllianceBernstein, their real estate. This is those REIT stocks that we talked about, global real estate as well. So, so not only with the stocks, really quite simply on the mutual fund side. So let's go ahead and take a look at some of these stocks, because as of, for instance, LSE is the London Stock Exchange. That may or may not be of interest, but what I'm going to do here is go ahead and click onto this number. And what this list is going to do is provide us with this listing of the 275 stocks that are hitting a new high today. It is going to be sorted alphabetically, which is fine, but let me show you another way to find real power in this list. Quite simply, we can initially sort it by sector, and what it's going to do is originally show you those that are not by sector. We can see there are ETFs in here and bond funds. So let's go ahead, and another pre-sort that we can do here is by industry. It's also going to do that same sort. But let's take a look here, because what you want to do, again, when looking for new highs, we're looking for where the strength is. And these specialty REITs are coming up all over. We can see these real estate lists that are showing up. And then as you continue to scroll down, software. This is a lot of what we've already discussed today as far as where the strength is. We really didn't get into with real estate investment trust why the strength is there. And a lot of them are specialty diversified REITs, by the way. So let's go ahead and take a look at some of these specialty REITs. And from here, we can just drill down. Here is Omega Healthcare. This is OHI. And I'm going to go ahead and pull this screen up a little bit larger. And it is having a very significant pullback, 4.3% today. But what I wanted to point out to you is OHI is a healthcare REIT. And this particular company, they do have properties that are healthcare related. And this is a big space with these property REITs because the population is aging. There's a need for these. OHI does long-term care facilities across the U.S. What they're finding is occupancy rates are really quite high. There are long waiting lists for these properties. So the fact that the stock is elevating, this is true of a lot of the specialty retailers. They are seeing high occupancy rates, particularly those that are dealing with healthcare and specialty retailers. And so this particular stock, in addition to offering strong growth prospects and continued income, this OHI has a 6.7% yield, and that's going to be really compelling. If you are certainly at this juncture in the market, maybe concerned as far as how high and for how long, these higher yielding stocks could very well be certainly of interest. So let's go back to this list, and by going here, I can actually show you how you can access these predefined scans. This is the initial interface page, and as you can see, we can scroll down here, and we want to go to the predefined scans. We're going to go back to this new 52-week high, and let's take a look at the NASDAQ. There are 39 stocks on the NASDAQ, and again, we're going to sort it by this industry grouping. And biotechs, let's go ahead back, because biotech stocks are going to hit a lot of lists a lot of times. And the reason for that is because there are over 500 biotech stocks that are out there. So a lot of times when you're looking at new highs and new lows, you will see biotechs represented. Just a sidebar so that you can better utilize this listing. And so we can see down here, these are these software. And we talked today about CyberArk, Coupa. These are two of the names that we reviewed today, and they are doing well. So one other area that I wanted to very quickly, because I'm going to give Tom a little bit of time here, is gaps up. And oftentimes you will see this gaps up list. It has 138 today. We can see over in Europe, 50 stocks on the London Stock Exchange. But a lot of these gaps up are going to be earnings related. We're in earnings season, so you'll see a pickup in the number of stocks that are gapping up potentially on earnings. We can take a quick look at DGII. This is DG International, a little bit of a smaller company. But what I wanted to point out to you is the fact that oftentimes these stocks, it's up 16%. They came out with earnings today, 167% year-over-year growth, 500% ahead of estimates. We can see this big gap up. Pardon me, a lot of times people will think that the move is over, but oftentimes this gap up can be the beginning of a move. We can go back here to their prior earnings release back here in June, and you can see it also had a significant advance, but continued further beyond that. Tom?
Okay, let's take a look at I'm going to take a different way of looking at the predefined scans. And so let me pull my screen up for you. Okay, from this, from your dashboard, Mary Ellen just showed how you can go under member tools over here and you can find your predefined scans here underneath reports and analysis tools. Another way you can do it, if you have this gears set up properly, if you've got your scans and alerts checked here, when you go to the bottom, you'll see your scans down here, and right underneath there, you'll also see predefined scans. So either way brings you into the same page that Mary Ellen was showing you, just a different place to be able to find it. So what I'm going to do today is I'm going to go with the bullish MACD crossovers for the NASDAQ. But when you pull this up, and I'll show you when you pull this up, and then if you want to edit the scan, so let's say that you kind of want to look at MACD crossovers, but maybe you want to make some changes. Here is where you can click to edit this scan. So here's the scan. Now, as you know, I used to follow MACD all the time, and really the MACD and the PPO are exactly the same, except that the PPO is based on percentage difference between the 12 and the 26 period moving average. The MACD is simply based on the dollar difference between the two. So if you're looking at the PPO, you can't really compare a PPO of Sirius Satellite or Sirius XM Holdings to, say, Google, because the price difference of those two stocks is so crazy that if you looked at the MACD, the dollar difference between their moving averages, you'd see a massive difference. You just can't, it's apples and oranges. With the PPO, though, it is taking a look at the difference between those 12 and 26 period EMAs as a percentage. So you can compare PPOs between a stock like Sirius and Google, even though the dollar price for those stocks is so much different. So what I ended up doing here is getting rid of the MACD and putting in the PPO. I also increased from 40,000 to 200,000. I don't want light volume stocks. So I increased that, and I got rid of the OTC, the bulletin board stocks. So if you go over here, I didn't want to do that here while everybody's watching, but essentially that OTC BB's gone. Here's the 20-day or 20-day moving average, which is now 200,000 instead of 40. And everywhere that you saw MACD over here on this list, if you go into this one now, you see PPO. I just swapped it all out. And so now I can check my syntax and make sure, and it says my syntax is correct, so I'm good there. Now I run my scan. And from my scan results, here I've got 23 stocks. Remember, this is on the NASDAQ. These are PPO crossovers. So you've got the PPO coming up from underneath the trigger line and crossing through the trigger line. Now, if you notice, most of these have low scooter ranks. And if you think about it, most of these crossovers are going to take place underneath the center line. And the way you have a stock under the center line, or a PPO under the center line, it means that they're probably not behaving very well technically. They're starting to strengthen, but they haven't been behaving well. That's why the majority of these are going to have very low scooter ranks. But they could be starting something big in terms of moves to the upside. Now, I mentioned earlier, Merck was a pharma that had broken a downtrend and was starting to come up. Now, Merck did not have a PPO crossover, but like what Mary Ellen was showing you, if we pull up healthcare and then come down here to the pharmas, there are a number of small cap pharmas that maybe we could take a look at. Now, many of these are going to be extremely volatile. Some of them may not be particularly liquid. I'm going to look first at these two, Tetraphase Pharmaceuticals and then Abeona Therapeutics, because they have a little bit more volume, but they're small dollar stocks, $1.31 and $6.82. And let's just see if there's something there on the charts that might make sense for us. All right, well, here again, I'm not going to probably trade too many dollar stocks, and I really don't like the overall downtrend here. But here is your crossover. This is why this was pulled up on this predefined scan. We've got the PPO rising back up through its trigger line. Now, I would maybe be a little bit more impressed if we were able to take out a $1.60 and the PPO were to get back through the center line. Because how many times have we seen this crossover during this downtrend where it just keeps downtrending? I mean, probably the best example is right in here where it broke above and went up for 2 more days. And then while the PPO was looking so much better, the stock just simply went back down. Got to be careful with any PPO crossover below the center line. So if you can get through the center line, I think that's when it starts to look a little bit more bullish. So TTPH, personally, I would pass on it, but that's how I would look at it. Let's take a look at Abiona. And remember, look at these scooter ranks, 4.2 and 5.7. These are not going to be great looking charts. Yep, next one, ABEO, same thing. Look at all of these crossovers, all these bullish, so-called bullish crossovers, and what would that have gotten you besides a lot of pain and a lot of losses? It's a good first step. It may be a confirming signal if you see something else you like on the chart, but I do not rush out and buy based on these crossovers, especially ones below the center line, because you've got a downtrending stock. Many times this is just temporary. What this is really telling you is that the overall momentum is down, but it's just not quite as bad as it used to be. And then many times we'll just turn right back down again. But you do have some support here on the stock just below 650 that has been holding. Once again, if I could get maybe through 7.5, get this PPO going through the center line and, start to show a lot more relative strength, then maybe it would become something I would be interested in looking at. So let's pull up a quick summary of what Mary Ellen and I did. We did take a look at a few different scanning possibilities, predefined scans. StockCharts does a lot of the work for you, by the way. I hope you've noticed that throughout all the shows and all the things we talk about and all the guests that we have coming on using different features at StockCharts. A lot of it, you don't have to think a lot. You just have to push some buttons and find what it is you're looking for. All right. Very good, Mary Ellen. Thank you so much for that.
Of course.
We can quickly just say that the stock market right now is faltering a little bit today. We haven't seen too much selling in the market, but we got the Dow right now still up 80. But when we opened the show, it was up 175. So it has pulled back 100 points. The NASDAQ has moved back into the red. So we do have the NASDAQ down 14. NASDAQ 100 actually is down 27 today. Really skewed a little bit because of Amazon and some of the other large cap stocks that are struggling a bit on a relative basis. But what's your preference? I mean, we have another minute and a half here. What's your preference when you look to invest? Are you looking for the more aggressive stocks found on, say, the NASDAQ or NASDAQ 100? Or are you looking more at the S&P 500 or Dow stocks, or does it not matter?
Yeah, I'm not so concerned as far as where they're listed, but I do traffic in growth stocks, higher growth stocks. So a couple of the names that certainly we listed today, I have representation as far as in some of these software stocks, and also some of these turnaround names too that have come in with earnings. I believe you may have looked at like ALGN, Align Technology. That was a big winner last year. They fell out of bed with earnings last fall, but came in with numbers that were decent. They were ahead of estimates, but it's not it's a play where the stock could potentially trade up to 300 is where that 200-day simple moving average. So it's kind of a mix right now as far as some of those higher growth names, and then defensive as far as REIT stocks and turnaround names.
Yep.
They a little overdone to the downside, but came in with decent numbers.
Yeah, I see stocks like, we need to wrap it up, but I've seen stocks like Align Technologies. Another one that was leading for a while in the technology space was Network Appliance, which is starting to strengthen again, one worth keeping an eye on as well. All right, always a pleasure to have you on here, Mary Ellen. Can't wait to see you again next Friday. We'll see whether or not we have what's hot or what's not, but there was your upcoming schedule. Do want to thank everybody for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at the Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.